Hello and welcome to Money in Motion video blog. This is Dan Perkins, and today we're going to talk about a few things. We're going to start with interest rates. For those of you that have been following interest rates, whether it's the housing interest rates or treasury rates, you've noticed that interest rates have moved dramatically over the last 60 days. In fact, interest rates have moved higher as a percentage, much greater than the market has come down over the last 60 days. We now have the 30-year Treasury approaching 4% and the 10-year Treasury approaching 3%. If the 30-year Treasury gets above 4%, and I think it could go as high as 4.25%, it will cause a problem for investors in that the yield of the S&P 500 is around 2%, so I could double the yield on the S&P 500 and have the safety of U.S. governments. Will make treasuries a very compelling purchase. So that would cause some liquidation of stocks and movement into longer dated treasury bonds. Even the 10-year at 3 or to 3.10 would still be a 50% increase in yield over the S&P 500. And with earnings becoming questionable going forward, the possible expansion of the market or more importantly, the contraction of the market, which could happen, may scare people out of the equity markets and into bonds. I think part of the sell-off that we saw in the stock market in June of almost 7%, and these recent dips in the last few days, are a result of people who are taking profits, getting out of positions, going to cash, looking for a better entry point. So I think that stocks are under some pressure, will continue to be under pressure, and I wouldn't be surprised that 1700, 1710 on the S&P 500 may not be the high for the year. We could see a little nominal increase over 1710, but I don't think much. I think we have more risk to the downside. Now on the bond side, we've had some protection with our TBT, which has been performing outstandingly over the last 6 months and over the last year. Now as the equity markets come under pressure, the SDS, which is the sister for the S&P 500, a double short of that, if I'm right that we begin to see some decline, we will see some appreciation in the SDS. What's different this time around is that when the equity market sells off, the bond market seems to sell off at the same time. Generally speaking, when the equity markets sell off, bond yields fall, prices rise. That's not been happening over the last 60 days. In fact, we see near-term higher highs and higher lows in the 30-year and the 10-year. Excuse me. I would expect to see continued volatility in both the stock and the bond markets. And I think that part of that volatility is a function of what's happening with the Fed, the uncertainty of who the Fed's chairman's going to be after the first of the year. What's the policy on the Fed in terms of quantitative easing? Are they going to continue it? Are they going to start tapering in September, as a lot of people think? I don't particularly think they will. And yet there's a new school developing that says perhaps the Fed may in fact think that the economy is moving too fast and might start to tighten. All this uncertainty is adding uncertainty to the markets. It's clearly lacking a direction or a focus. Two areas where we've seen this selling gains and coming back at a later price is in two of our favorite stocks, both Gilead and Mankind. Gilead hit 63, 64, a new all-time high, has backed off to the mid-50s and is climbing again. Mankind, which if you saw my report from last week, reported the successful conclusion on their phase 3 trial on their insulin replacement therapy, saw a move above $9 when the announcement was made, and the stock sold off for most of the day, continued to sell the last few days, and started to move back up again today. A lot of people have profits, including us, sold and now are trying to figure out when they're going to get back in. I've always told you I'm not a market timer. I look at value and I want to hold value longer term. I still believe both of these companies offer significant value. In the case of Gilead, most of the Wall Street firms research firms have moved the target over the next 12 months up to $83 to $85 on Gilead, and on Mankind, which is trading about 6.5, 7 today, moved it above 8. I think these are great long-term plays, and they'll serve us well. Excuse me. We've seen a significant increase in oil prices. In fact, when I was in Columbus on the 14th of August, I watched as I went through the day, literally gasoline prices move for regular gasoline 35 cents in one day. And so we've got a spike up in oil prices, and we've seen a spike up in pump prices for both regular diesel and high test. I would expect to see further upward pressure as we turn to the Middle East and look at the turmoil still in Syria and what's going on in Egypt. Hundreds and hundreds of people are being murdered in Egypt, and there's no real leadership. We have a conflict between the radical Muslim Brotherhood who wants to return their president to power, and the military who's saying no, and we've got this conflict in which hundreds and hundreds of people are dying. This is an economy that desperately needs financial aid from the United States in order to continue to survive, not prosper, just survive. And yet we have a president who is reluctant to declare that the takeover by the military wasn't a coup, because under U.S. law, if it was declared a coup, all financial aid and support to Egypt would have to have been cut off. So we have still no resolution in Syria. We have turmoil escalating in Egypt, and we've got a president who wants to lead from behind. All of this puts pressure on oil prices, which means we as consumers are going to pay more for gasoline and diesel fuel at the pump for some period of time. So it's not an easy time. It hasn't been a smooth summer. It's been a summer of volatility. I expect the volatility to continue, and I think there's more downward pressure than there is upward opportunity in the markets at this moment in time. But as always, I'm trying to find the best yields, the best returns that I can, meeting your needs for income and capital appreciation. Should you have questions, please feel free to give me a call. If you have friends or family members who are looking for help, please feel free to give them my name and email and phone number, and I'd be happy to talk with them. Thanks for watching.